Ladies and gentlemen, welcome to Insurance Town. I'm the Mayor, Heath Sheeran, and I'm the host of this podcast, and I'm pumped you're hanging out with me today because I got my friend Peter Flynn hanging out with me today, and a shout out to my friends, the Tin Company, with Claire, Di Nicola, and Candace Boyle. They hooked me up, introduced me to this guy, and we had a great conversation. The only problem is this guy's way too smart for me, so he had to explain a lot, but hopefully that'll help you guys too. So guys, make sure you check out this conversation today, but Smart Choice is your fastest growing agency network, hands down. With 10,000 agencies and $11 billion with a B in written premium, it's no wonder they're the fastest growing agency network in the business. There's a lot of networks and aggregators out there, but Smart Choice is the way to go. Go to smartchoiceagents.com and you'll see why. Also, Canopy Connect is all things intake forms, all things intake process, all things, anything and everything you need, from forms to deck pages to loss runs to driver's lists, you name it, if it's on their deck page. And you don't have to ask a ton of questions to get it. It's all right there in your dashboard. Go to usecanopy.com/Heath, get your discount, get your demo. And ladies and gentlemen, I'm going to slide out of the way so you can check out this conversation with Peter Flynn.
Pete Flynn, my man, what's going on, brother?
Heath, good afternoon. Good to see you. How you doing?
Yeah, I'm so thankful that, we were able to be introduced and we were able to have this conversation today. And I'm thankful. Shout out to the Tin Company for introducing us and able to have this conversation. And I just love what you guys are doing and hearing your story from them. And, I look forward to diving into more about what you guys are doing, because there's a lot, we can get into today. So I'm hoping we'll be able to get into all of it. So with that being said, before we get into some of that, because, I would love for the audience and myself even to learn more about you. So if you want to take a quick walk down memory lane and tell me, who is Pete Flynn? Tell me your background and what led you up to where you are today.
Sure. Yeah. Thanks, Heath. So I'm Pete
Yeah,
Flynn.
man.
I lead the personal lines vertical in the Americas for Exceedance, and I'll tell you more about Exceedance in a minute. But so
Yeah.
my background, I was lucky enough, 2 weeks after college, I started as an underwriting trainee at Chubb, which is an unbelievable place to get your start. Very lucky to have been there. I spent 15 really great years there in Jersey and in DC and in New York, doing a bunch of roles over about the first decade in personal lines, and the last 5 years or so focused more on the commercial P&C space. But just a great experience, a great place to work. And then those were roles mostly in underwriting and in distribution management, so working with agents and brokers. And about toward the end of my time there, a broker that I'd worked with in New York City for a long time, running that relationship, called Frankel and Company. At the time, they were about the 50th largest broker in the U.S. Frankel tapped me to come join them to become their chief operating officer. So it was kind of a once in a lifetime opportunity. I was at a moment in my career where I wanted to grow and learn. As much as I love being at Chubb, and I, sort of envisioned myself there forever, I couldn't resist the chance to go make the jump. So I became a broker. I went to the other side of the business and sort of learned about working in a world where, as an underwriter, you can say no. As a broker, you've got to find a solution no matter what. And so it was a great 5 or so years. I was there through the transition when Frankel joined Epic, which is now, one of the largest firms in the U.S. Toward the end of that time, I reflected on what I wanted to be doing, where to go next, and I joined Pure, another really great company. Very lucky to get there. Incredible culture, incredible structure, real orientation around policyholder members, which is a great place to learn. Spent about 5 years there, leading distribution initiatives at Pure. And then just a couple of years ago, I got a call from Exceedance and met Travis McMillan and Arun, our founder, and was just taken by what a cool opportunity this was to come build out this business.
So when you say this business, so what is different, like, going from, Pure and some of the companies you've worked with in that high net worth home space and working with P&C agents in that area? This is, from what I understand, working with Exceedance, just a little bit different. You've been on a carrier side. Now you're working more in it sounds like a technology space and working in, more of a back end space than I would love to hear maybe a little bit more what they mean by that.
Sure. Yeah. Well, why don't I spend a minute, Heath, unpacking what Exceedance does, right? And
Yeah,
so,
let's do that real quick.
so it is very different than what I've done in my career thus far, but it's a place where I can bring my domain competency to bear in a new way, right? So,
Yeah.
um, Exceedance was founded about a dozen years ago by a team that had founded a Berkshire Hathaway
Okay.
subsidiary in India. Think the Geico model, a direct-to-consumer auto brand in what is the world's largest democracy, right? So, in a growing economy in India. For a few years, they ran that business, and eventually, the market wasn't ready, the timing wasn't right in Berkshire, and they agreed to shutter it. At that time, these guys realized what a cool venture it could be to create a platform that basically did everything an insurance company does except for take risk and except for distribute products. So they basically built out this model and took on some insurance company clients that now is a couple hundred clients around the world, where we do every operational element of insurance that insurance companies do, from finance and accounting to customer service to policy service to decisional underwriting to risk management to a claims TPA. And I'm leaving out 20 of them. We do those things operationally. We do those things as consultants, where we help companies drive better outcomes in their business. And we employ technology and AI into those elements of our company clients. So MGAs, carriers, some agents and brokers. So I joined Exceedance, which had historically been a commercial and specialty and MGA on the commercial side business, to build out the personal lines vertical in the Americas, given how big the personal lines vertical space is here. So been about a year and a half, and it's been an awesome ride.
I'm very involved in, state associations and national organizations, and you guys, you got to speak at the PIA national event, and I would love to hear more about what that was for you. What did you unpack for them on stage, and what did you talk about there? And tell the audience a little bit about that.
Yeah, sure, Heath. Um, you know, that's a very different topic. So I joined I was down at the PIA National. I think it was earlier this year. I
Yep.
have some pretty good airline status, Heath. I'm a man of the road. I think that
Yeah,
was
I hear
early
you.
in, I think that was early in, it was probably late in 24, down in Virginia.
Yep.
And that topic was AI and its impact on personal lines. And coming into that room where you've got PIA folks from different states and different walks of life. My thesis was talking about the fact that I wanted to socialize where AI was in that moment.
Yep.
Where does buzzword end and reality begin? I wanted to talk about the idea that I think as a society we have the tendency we tend to overestimate the impact of technology in the near term and underestimate it in its impact in the long term. So we sort of unpacked those topics around personal lines, right? For example, you're going to see a pretty big impact from AI on customer service. There's very obvious use cases for how insurance companies, agencies, brokers can implement AI to make customer service more efficient, to make it go faster, to create better empowered customer service agents who can move more quickly and efficiently, right? We see good examples of it. We also see it deployed poorly, but it's happening.
Sure.
You can see it in claims, where carriers have now for years been using AI to do auto damage assessments or fraud evaluations or other areas like that, where it's very easy to create a use case to bring AI in to make a process better. But the other thing we talked about, so that's like the stuff that's right in front of us. If you think about the product, if you think about the base policy form, if you think about pricing to exposure and assessing what exposure is, I think AI is a long way away. I think that the role of 50 regulators plus DC, with all different standards, even with the NAIC helping us think about it, like there's lots of different obstacles and barriers to entry for AI to become really a catalyst for how the risk taking transaction is done.
Well,
So
because
that's the kind of stuff we went through and more.
Well, yeah, because there's so many different data points in there with, like you said, 50 different states plus DC plus Puerto Rico plus all these other things. It's going to be, damn near impossible for an AI, something like that to get it right. It's going to take a long, long time, I should say, to get it just the way you want it and the way things evolve. And I would agree.
But I don't think it's because of the technology's ability, Heath. I think it's because of the regulatory framework, the legacy in place that different carriers have, the
Right.
mindset we all bring.
Well, yeah,
You get a credit for having a sprinkler system built into your house, even though the water damage claim it's going to create is bigger than the fire benefit it likely offsets,
yeah,
right? You get a burglar alarm credit that's the same as your fire alarm credit. None of those things really probably aligns to the risk the way we intended them to when we decided to make that the rule.
exactly. Well, and then you think about the amount of clean data you would have to have, and you have this many entities and this many carriers and all the things that go into that. One carrier may put it in as one way, and then another carrier puts information in another way. And to have the AI be able to read all of that, generative or AI or any kind of AI for that matter, it's going to be a uphill task.
Yeah, and so that conversation was about that, right? There's tons of clear use cases right now. And there's the use case that says a wholesaler is taking in submissions for tough cat property risks from different retailers. You can use AI now to ingest different disparate submissions and create a unified outlook of what that submission should look like to make an underwriter go faster, to empower the E&S industry. Like, there's lots of individual use case, which is transforming efficiency and service and things like that. The broader transformation of like reimagining how risk is transferred.
Yeah.
That's further away. It's a fun thing
do
to
you
think.
do you think in the E&S and the MGA, the non-admitted space, the even admitted some, do you think that some of that E&S has more of an opportunity there because of the wild west aspect of it, more than some of your legacy carriers, some of your old school players there? Do you think that some of that lends itself better to kind of have a playground for the MGA space or the E&S space to test some of this stuff out?
No question about it. And I think you see it bearing out in where activity and where capital is flowing right now. What's getting started up, right? If I were to invest my capital in taking risk right now, I'd want to
Yeah.
do it on an E&S basis, right? Why would I want to participate? If I can create the right claims experience, the right policy experience, the right customer experience, I want to maintain that freedom of rate and form, because the volatility that I'm facing is so great, right? So I
Yeah.
think that non-admitted space is growing. And I also study the residual market because we do a lot of work there. The amount of so you've got the admitted market, you got the E&S market growing, and then you've got the residual market growing at the end of the value chain. The size of the share the residual market takes right now is 2x what it was 5 years ago, right? So it's doubled in size. I don't have good data on how much bigger the E&S space has gotten in personal lines, but it's a lot bigger.
It is a lot bigger. Yeah. And it was just a time that E&S was mostly considered just for commercial for cases or for hard to place. But now, especially the way the market is with personal lines, you're seeing a lot more business written with, whether it's a Lloyd's market or some other personal lines broker, or I even see a lot of these, specialty niche type carriers, so to speak, popping up that are on a MGA type of model, whether it's just auto or just home or even home and auto. And I'm wondering if you're seeing a lot of that as well in what you're doing. I'm just in my sector, but you're seeing things on a larger scale probably across the country. Are you seeing a lot more of that too?
We're seeing a lot more of that, and so we're seeing a couple different things. We're talking to tons of firms on that journey, some of which are coming out of admitted markets, right, being spun off in an MGA structure. Others that are starting up, and it's really interesting to see, who thinks they have the secret sauce, like who thinks they've got the view in they can price risk better, or they can assess risk better, or they know more about construction. I mean, there are so many sources of data now that you can aggregate to get a better understanding of, how prone or damaged is a roof, or
Yeah.
what's the defensible space around a property. There's lots of different ways to sort of stir this sauce right now, and it's fun to watch different players taking a different tack toward it, right, as they go.
Yeah, and as a former agency owner myself, a big thing for a lot of people that we talked about for years was that package deal, and making sure you had the home and the auto together, and there's package discounts, and there was all of these things that you wouldn't dream of writing, a home without the auto or auto with a different company in the home. And I wonder what you're seeing now in this hard market and the way things are going, even coming into our fifth year of a hard market, maybe some would say sixth year of a hard market. Are you seeing more carriers or more, maybe I should say more consumers and agencies okay with writing a home separate than the auto and kind of piecemealing it just because of rate increases and because of volatility and claims and whatever it might have been?
I don't know that I have trends on that, Heath, and whether there's difference in how much packaging is going on. I
Yeah.
just always my view is more about if you start with what does the consumer need, you're going to get to a better outcome versus the carrier priority that might, push toward package because they want to subsidize one line with the other, right? And um, so, as a high net worth, my background in personal lines is predominantly in the high net worth. We saw plenty of consumers who said, "Gosh, I've got a multi-million-dollar home that I want to have a Cadillac policy on, but
Yeah.
my cars, despite being high value, are in fact leased, and I feel as though the mass market consumer auto companies are going to put them back together just fine." So the consumer behaves in a way that's clear, right? They're going to say, I value the risk transfer differently depending on what the how risky the product is for me.
Yeah. Yeah, I understand, and I appreciate that answer. And I tend to think that there's still a lot of value in that packaging and in some of that, but I also do see where there's a big need now for the E&S space to come in and play, especially with a lot of the carriers right now looking at 7-year-old roofs, 8-year-old roofs, maybe, back in the, several, not even that long ago, it was 20-year-old roofs was okay, 10-year-old. And now when you're, getting smaller and smaller in that, and people can't necessarily afford to replace them that often, I think more opportunity for ACV, much less, E&S to come in or MGAs to come in. Go ahead.
Yeah, yeah, I think Heath, you know, roof in particular. I mean, in my travels, we have we're one of the biggest property inspections companies in the country. We do 1 million inspections a
Okay.
year. And
Yeah.
I've been traveling. I've been part of my roadshow is going to see clients in that segment. And when I say, "Hey, what's the wish list?" The number one thing is give me better, different, unique visibility into roof. And what some carriers were saying, to your point, to the comment you made earlier, some, go to work saying 7 years is better than 20 years. Some are now saying we think we've got enough insight to realize there are 3-year-old roofs that are far worse than 30-year-old roofs because of what's sitting over top of them and where they are. And
Right.
they're trying to get everyone's just trying to get more and more and more and more precise.
Yeah. And I do, I can respect that. And I do see where there's these states that are trying to get approved. I think Alabama just did certain material to build roofs with and to build houses with that are more, resistive to whatever the element might be. And I think maybe you're like, as you're doing inspections, I'm thinking that's going to help some. But again, it's got to, move beyond just Alabama or whatever the states have approved that now. And then I also wonder about, different tiered shingles, and if we're going to see that kind of material go up, or even a more of a use case for metal roofs. I know we're seeing more and more of that on residential homes and just commercial buildings. So
Yep.
I wonder what you're seeing, what your thoughts are on some of that, if that's going to impact in a positive way down the road.
I think it will. And so what I look at as being really a favorable trend right now is, it's just hard to scale, is you can't just solve this with price. And you don't want
No.
to solve it by going to ACV, right? Any of these problems. You don't want to say, well, the only way to do this is just to strip coverage. And you really just can't rate your way past the fact that convective storms in the Midwest are hail's getting bigger, storms are getting less predictable. So you're seeing a lot of states, a lot of communities, and a lot of organizations getting more focused on hardening, right? So if you look at the I think it was a cat bond that Carolina just did, that includes hardening, components that link to good hardening behavior. If you look at what the IBHS does around setting standards, all the way back to Miami-Dade after Andrew saying, we're going to have 27 bolts in every window, and it's going to, park bench can hit it at 100 miles an hour. It's not going to break. That mindset has transformed the way South Florida construction goes. The further that stretches across the country, that mindset, And here I'm in New Jersey. My insurance company just sent me a Ting monitor. I plugged it into my wall. I get an update. I get my watch goes off when my power gets browned out. Like companies are thinking about ways to, to prevent risk, to harden
Yeah.
buildings. That kind of work, we got to do 10 times more of it.
Yeah, and I'm guessing that would fall into the IoT or Internet of Things kind of category. And so I'm wondering, we've heard about this, with maybe I've heard about it, and I know some of my audience probably heard of it when it comes to clothing or comes to things like that. But when you're talking about devices like that, or even like the dongle, there was things you plug into your car for things like that to monitor your speed or whatever. How is that IoT or Internet of Things allowing for more like customized, personalized coverage? Where is that customization headed? Are you seeing more things like you just talked about being plugged into your home, or is there something I'm not even thinking of right now?
We're both not even thinking of right now, but I would
Yeah.
say, like but and I don't have data. I don't have good data. I think my sense is adoption of IoT devices is that link up to one's insurance product is still pretty low. And my
Okay.
sense is that in places where adoption of a product links back to your pricing, you're not seeing that much change in the way it impacts price, right? So if, like, for example, my homeowner's insurance company has increased my rate 20%, 3 years on in a row now. I'm up 20, 20, and 20. They sent me a free Ting. Those lines never really cross economically. I just feel good that we're trying together to prevent loss. Um, I don't have a good enough data set on what Geico says about how its telematics tool is actually impacting its bottom line. There's probably some public data out there, but I think you're still in a low take up mode. Your base rate, your damageability, all the other things about pricing still are outweighing the impact that the IoT things are having on the outcome.
And what about, okay, so that being said, going back to the inspections piece of things, like back, I can imagine through the history of inspections and whatnot, it's obviously evolved, but it was, you take a look at the roof, maybe look at the foundation, take a few pictures here and there, let them know if they need to update the porch, get some railings right, whatever. But now, as that's evolved a little bit to 2025 and beyond, what are the newer things they're looking for? What is some of the audience that are agents or carriers listening right now? What should they be looking after? What should they be thinking of when it comes to inspections beyond just, I got to make sure it looks visually appealing and maybe cover up a few things with some paint, throw a few, new railings up, and I'm okay.
Yeah, so I think the first thing, Heath, is that it, there's still companies that do inspections still very much value the current set of eyes, boots on the ground, general condition assessment that says there's pride of ownership. There are no obvious hazards and conditions that create immediate risk. Okay, that's that. But then, yeah, as I'm on this road, on the road talking to clients, I'm saying, I know it's helpful to you that I tell you there's a diving board at the pool, but your non-weather water damage in the house has probably been pretty problematic for the last 20 years, right? And the answer is yes. So it's like, all right, well, let's figure out ways to identify how old the water heater is, and let's append that to our report so that you can start creating an alert for that policyholder that says, hey, your water heater is 9 years old. Get it looked at before it breaks. So I think certain hazards like interior water damage, people want to know more about it. Certainly, the roof is number one. They want better visibility in the roof. There's a couple companies that still go up on roofs. Not very few of us do. So it's a camera pole. It might be some digital imagery we're collecting. But we all are trying to find new ways to get smarter about it. The other thing we have, one of the reasons the inspections business was appealing for Exceedance, and we made an acquisition in this space, we have hundreds of millions of digital images, right? So over the next couple of years, we can learn a lot about different risk conditions and start applying back those learnings through AI, through machine learning, to understand better and create better predictions of outcomes and help our clients in that regard as part of the inspection product. And I think companies are expecting that for sure.
And what does that look like now versus 3 or 4 to 5 years from now?
I think now you're seeing the surface get scratched. You're seeing The best inspections companies have really good quality validation teams, people who understand when they're looking at a house, oh, that pipe coming out, that tells me there's a wood stove in there. That those kind of recognitions that you need to have knowledge to do. I think we're trying to augment that over the next 2, 3, 5 years to speed up that intelligence, to give that person more things to look at that they can create more outcome based insights around. That kind of work. So the use cases, frankly, Heath, are infinite. It's a
Oh,
question
for
of where you
sure.
start and how you use it. Right? There's so many things you could be doing. You just want to find the ones that help the carrier say, "I'm so much smarter about this risk than I would have been had you not shared this insight." That's what we're focused on.
Yeah, 100%. And I think, I come from a commercial insurance background and, writing mostly commercial and a big part of that was, having, someone, a risk manager or someone like that, in the agency or someone that could help that client to be able to do that or focus our time, with a good narrative to explain to the underwriter at the carrier to say, hey, here's the conversations we've had. Here's what they've got going on. This is explaining what the losses are. This is this. Being more risk focused on that and, having that risk management standpoint and putting in loss control features, all those things I'm seeing. And what I'm hearing from you, that's a big, shift going to be coming to the personal line stage now. And as a personal lines agent, there's no more just, or maybe I shouldn't say no more, but the future might look more like commercial lines of the past and what it is now than what personal lines used to be, just plugging in an address and updating the age of roof and a few other things and get a quote. I think you might get more favorable quote if you're more of a risk manager in personal lines. Is that what you're saying?
I think that's an ideal vision, Heath. I don't know that I'm predicting that. I think I'd say that the homeowners business hasn't been a good one to be in my whole in a generation, right? It's generally an underperforming market, and one of the reasons is the inability to effectively price risk, because it's hard to understand exactly what risk you're taking because every house is different and you only have so much information about it, right? So what we try to create is more visibility. So I'll give you another example of an innovation that's happening. It's in our
Yeah.
company and in the market where it used to be the inspector was a guy or a gal, out pushing a tape measure wheel with a clipboard and a piece of graph paper, and then that graph paper eventually got put onto a computer, but it was still a wheel and some sketching being done. And I think within a year, you're going to see companies like ours, or maybe even more quickly than that, empowering our inspectors with, they're out with their phone or their iPad and they're taking images at the property and they're immediately creating a full diagram that creates a very accurate reflection of the square footage of the home, which then can translate through to the coverage A, which then can translate through to the charging the right price. Right, you're going to reduce leakage there. You're going to increase speed. You're going to increase precision. You're going to give greater visibility. We're using the same technology in the claim side every day. By the way, we are deploying. One of our theses in our claims business has been the independent adjusting sector hasn't innovated very quickly. It's to some degree a disappointing sector.
Yeah.
And I have a claim in my home. I don't want to wait 10 days for someone to come see me. I don't want to wait 2 days for someone to come see me. If my insurance company says, "Hey, Mr. Flynn, I can give you a web link right now and you can start documenting the features of your claim right now with your phone, and I can put that on a desk adjuster's desk tomorrow morning, and I can have your estimate written tomorrow. We can talk on the day after tomorrow about your claim." That's a really satisfying outcome for me, the policyholder. I just saved the insurance company money, and the whole thing's a virtuous cycle, right? So we're looking we're doing a ton of that on the claim side as well, using sort of those virtual consumer self-directed technologies.
So, we were talking about inspections, and now you're getting into claims a little bit. In a company like Exceedance, and what you guys are doing there, that's a lot of different hats to wear as a company. Operationally speaking, and is there, a lot of, I guess, is the staff that? I mean, you said 10-year-old, 12-year-old company. Is that a large staff there, or you have just a lot of? Explain to me how you can wear that many hats and be able to operate in that way, like just from high level standpoint on that, because that's a lot to take in.
Yeah, no, that's a fair question. So we have about 4,000 teammates around the world.
Oh wow, that's
Um,
amazing.
and there are, I think, just shy of 600 of us here in the U.S. And we deliver services through what we call domains. So, delivery domain areas. We've got a technology domain. We've got a life cycle and operations domain, which is underwriting and customer service. We've got this risk inspections business. We've got a data and analytics domain doing CAT modeling and other data work. And then we've got the claims domain. And so in each of those domains, the leadership team is all experienced carrier, broker, TPA type folks who comes in and builds it. So, for example, the guys that came in 4.5 years ago to build our TPA and our claims business in general, they came out of 20 plus years major brand name carrier backgrounds. And the first thing they did was they went to a whiteboard and said, what doesn't work in this space? And we're not a tech disruptor. We're a full end-to-end operational support company. So they had to do it in a way that was realistic. And then we took it to market. And so we're a TPA in some really big self-insured programs on the auto side. We're a TPA in some really big auto insurance companies. And we're an end-to-end TPA in some really big property companies and fair plans. And so it's all based on having insurance company folks doing this kind of work, right? And our tech and AI enablement's really strong. Our sort of competency in driving process is really strong. But we don't do it from some consulting background. We do it from an insurance point of view. That's kind of that's our knitting.
Yeah.
Does that make
So
sense?
yeah, it does. And with all that being said, then with all of those things, like what is like your ideal client, so to speak? Who would that be? For like how fast do your projects kind of roll out? What is your ideal client? That kind of thing.
So that's really hard to answer. I'll tell you
Okay.
this. If I look at our client base today, our biggest number of clients by volume is insurance companies. Our second
Okay.
biggest is MGAs. Okay.
Okay.
We work with a ton of insurance companies and MGAs. We're not very big today in agent and broker. Watch us in that space, but we're not very big there yet. We don't have minimums. We are not a product company. We don't sell a widget.
Okay.
We sell solutioning, right? So we might bring different disparate technology providers together or AI providers together to cobble a solution that we go execute with our clients. We pride ourselves on not having minimums. We work with startup companies where we participate in their success as they grow. And we work with big landed major brand name companies where we slug it out on RFPs and work with the procurement team and go through that process and everything in between. My ideal client is I don't want to be called a vendor. I want to be a partner,
Oh, I
right?
love that. I love the partnership aspect.
Yeah, where someone says, "Gosh, these guys bring an extra level of insight, an extra level of quality, an extra level of value that makes us better." And gosh, they're our partners. Let's bring them in the fold. That's a really good outcome for us. Otherwise, I feel, I'm sure when you were an agent, you felt the same way. You had clients who called you and they wanted to talk to you about what should I do? What's your advice? And when your advice was valued, you were valuable. And when
Right.
they said, how much is it? And they shopped you every year, it didn't feel great. It's the same thing in
Right.
my space.
So, I think that what you brought up there hit a big spot for me because I'm a big partnership guy, relationship guy. And you're right. There's a big difference in a vendor and a partner. And especially working with carriers and MGAs in that space because they're so reliant on some of these data metrics and some of these things that you're talking about, some of the things you can help them with, whether it be, to lower their loss ratios and to help them with their, the things that help them to make the money that help them to be revenue generating. And so, talk to me a little bit about maybe what you guys are doing with carriers to help them to whether it's mitigate risk or help them lower their loss ratios or help them to do some of the things that you guys are doing with them. If I'm understanding correctly, what you guys are all doing there with these carriers and MGAs. I think I've got a good grasp on it now.
Sure. I think if I take, for example, one ideal vision that we have, particularly in personal lines, whether it's with an MGA or a carrier,
Right.
is in my experience working at companies. There was an island of product development and underwriting and an island of claims. And sometimes the load the bridge between them could bear was a bicycle,
Yeah.
or someone on foot, or it could be an 18-wheeler. In the
Yeah.
cases where the bridge was not very well built and underwriting and claims didn't talk very well, after a big loss, they would all say to each other, "Oh man, if we had just known or had visibility we'd have been better off. So one of our ambitions as a vendor is, or as a partner, look, I just did it. As a partner is to go help our clients build those bridges. Hey, our claims team is picking up these insights every day because we got a big reporting group in our claims area. We're going to give that back to product and underwriting and say, let us help you think about how to reintegrate this information we've gleaned from our process to drive the way you're doing that. Aren't, in customer service where, we've got one client, we answer 1,000 customer service phone calls a day for them.
Wow.
And we are constantly picking up information in that process. And we're building AI tools to help us do this more efficiently. But we're picking up information that we're bringing back to them. And that's helping them create policy and procedure and process. And in return, by the way, they have their own call center as well. They don't treat us like a vendor. They treat us like their second call center. We're an extension. We're in the
Yeah.
same meetings. We're in the same cadence. We're in the
Which
same
is huge that they bring you into their team meetings and you're part of them. It's not us and them. It's you're part of the team.
It's in sync. Yeah, it's totally.
And that's what sets you guys apart. I don't know what competition would be there for you, but that's got to be what sets you apart from if there were a big competition for you. That you are on those calls. You are the team. You are in those high level conversations all the way up from C-suite down to customer service. I shouldn't say up and down, but you know what I'm saying? Like laterally, you're involved in every aspect.
Yeah, that's right. And there is competition for sure, and it's typically pocketed though. We go against TPAs for claims business. We go very few
Yeah. That
very
makes
few
sense.
end-to-end competitors.
Yes. I love this. And I think that what you guys are doing has to be bringing a value that I know I don't quite even understand to the full nth degree. You may not either, being an employee there, but talking about all the things that you guys do from a carrier standpoint. I know working for a carrier has got to be hands down a huge partnership for them and something that they probably want to bring you in those conversations because of the value that you bring and because of the way they look at that partnership to say, this is not just some vendor that helps us with this widget or helps us with that, thing. This is like a holistic approach to what we do in this pocket, or holistically will help you to drive more revenue, to be more profitable, or to drive down this or to help this, whatever it might be.
When we sit with our customers, we understand what their business dynamics are beyond whatever the work type is we're talking about in that conversation. If I look at our growth in the last, over the life of the company, the biggest driver is referral. I mean, some people, you can be proud of that, or you can be bummed about it, depending on what your view of a sales organization is. But
Right.
the reality is, we see a lot of C-level folks leave one place and go to another, and all of a sudden we went from having one client to two, and it happens every day, right? And it's a testament to the way the teams show up.
Yeah.
So yeah, it's a fun place to be.
Yeah, and there's so many things. I just look down to see how much time we have, and I'm taking a ton of notes over here because what you was dropping here is some good stuff, and I gotta thank the 10 team, the 10 company for bringing me in or bringing you in here. But so as I've been going through here, so many things, I'm trying to figure out where to unpack next. But talking about your team, and you have such a large team. How do you staff for onshore, offshore? Operate. You operate globally. Obviously, you're the United States. PNC for the life or the property and casualty for the home and auto stuff. But like overall, as a company of 4,000, you said, is there a lot of offshore? Is there a lot of virtual assistants? There's a lot of that kind of stuff in different areas. How does that work with you guys?
So we are our ambition is to be global, not onshore, offshore, right? So we are a right shore model, and if I think about our team breakdown of about 4,000, as I said, about 600 of us here in the U.S. There are a number of 400 or so in Europe, and between London and Krakow, Poland, and then the balance in 4 offices in India. And um, we are really not we're really not a labor cost arbitrage company, despite
Okay.
I think most people's heads go to that pretty quickly.
Yeah.
It's more about domain competency and expertise. So a lot of our best data and analytics folks are in India. Some of our best process mapping people are in Poland. Our best claims people are here in the U.S. Right, so it's really about where the most talent resides.
Sure.
All of our call centers are in the U.S. We don't answer any phones outside the
Okay.
U.S. only because our clients don't want us to. If they wanted
Yeah.
us to, we'd open a call center somewhere else. Excuse me, we have a call center in Europe with multi-language call center in Europe. I forgot that, but other than that, that's how we do it. So it's really about what client demand is. If I think about our personal lines business in the Americas, more than 95% of it is performed onshore in the U.S. Just again by virtue of work type, it's available anywhere, but that's what the clients have typically asked us to do.
Okay. That helps me a lot because you're right. I did go straight there.
Yep. And by the way, Heath, there are giant companies with 400,000 people, let alone 4,000 people, that can staff to some giant offshore,
Right.
programming pit kind of need, and they're really good at that. That isn't really how we choose to compete. We choose to compete on expertise and precision and alignment of service to need. So again, if cost becomes a factor, we find out where to do it the best. We're growing a team in Canada right now. We're growing in a number of other jurisdictions, but it's the idea is to do it where the client wants it, not to try to just compete on being cheaper in one place or another.
Yeah. I appreciate that because I'm trying to wrap my head around that. We've talked about claims. We've gotten into some of the stuff that you guys are doing with inspections earlier. I would love, as you talk about with carriers, I would love to know, if you're working on stuff with underwriting and, with workflows there, what does that look like? Is there something you could explain to me and the audience there about some of those workflow things and what you guys are doing there to help the carrier, which also would help my agents listening to understand that, even though you said you don't really work a lot with agent and brokers, but hearing that would probably help them to kind of wrap their head around what you guys are doing on that back end.
Sure, and I'm going to try to answer this in a way that doesn't have us lose listeners, but and boredom. But our underwriting support services range from end-to-end decisional underwriting. Right, we receive the submission, we underwrite it against the rules, we make the decisions, we dispose those in the policy admin system. We've got a team that's principally in Massachusetts that does that for carrier clients. Or we have a carrier come to us and say, what's bogging our underwriter down today is triaging new line submissions. And so we create a desk team of new line submission underwriters. And that might be onshore or offshore, depending on what the client, how they want to do it. One of the benefits of offshore is we can do it overnight, right? To move things twice as fast. And we might then just triage new line submissions to prioritize them appropriately for the right people and workflow management. Or we get a carrier that comes to us and says, Exceedance, you do 10,000 inspections for us every month. And of those, 1,000 have conditions that we deem major. And we need someone to look at those 1,000 and help us triage them and process them. And it takes our underwriters 15 minutes each. So we take on that task type and we run that desk to manage that work. Or certain kinds of endorsements or those kind of things. So we might pick up one element of the workflow, or we might pick up the entire end-to-end decisional, where we become like a staff augmentation. We give them more underwriting bodies. That's in day-to-day desk underwriting. There's also, we might help on the product development side, the actuarial side, where we're helping to build raters and rates and file things for companies as they make product changes in their underwriting teams. Or there's also help around my train of thoughts. There's product development. There's sort of staff augmentation of doing that kind of work, and then there's underwriting, audit work, and other sort of underwriting ops work. Right.
Sure. You talked about, you mentioned product development and whatnot. How do you guys assist with new product development? Are you guys involved in those conversations with carriers and with the MGAs on new product development, especially in a niche or an emerging line of business?
For sure. So, and I probably have more commercial use cases than I do there than I do personal lines. But we're routinely talking with clients. MGA is a really good example where, they've got the idea, they've got the data, they've got the capacity lined up. They need someone to come in and help build out the product and the rate manual, help them load that into a rating engine tool that's going to sync up to their tech stack. Our actuaries are doing that kind of work, building that out for them, whether it's just building the raters or it's building the end-to-end rates all the time. And that might be for a new type of product. It might be for taking an existing product to a new state, and anything in between.
Oh, that's awesome. So I think that because that's a big pressure point right now in any carrier at any MGA is that developing those products, especially as new niches emerge on the commercial lines, but also there's some of that in personal lines, with the different niches, and there's some even agents and brokers, even MGAs and carriers that are niching into specific. Like you said, you worked at Pure.
Mhm.
Their market was high end. There's a lot of carriers that focus on the middle market, or they focus on the non-standard auto, or they focus on this or that, and so there might be they want to segment to another area. And so I imagine you guys, with all the data you have, all the information you guys, all the work that you guys do, you probably be able to bring a lot of value there in that product development space. And so
It's true. And I think what you see, one of the things we see with sort of disruptors coming in, wanting to create a new product or a new market entrant, they typically underestimate how cumbersome the regulator is, right? How hard it is to just get through a
yeah,
filing and get something off the ground in a given jurisdiction. So we give a lot of horsepower there. Once people realize, oh no, if I want to go multi-state, it's resource intensive, it's time intensive, it's back and forth. There's a lot of labor. So yeah, we help folks, do that better.
that I think that with so much of that going on, I think that more and more carriers, I hope that with this and, some of the things you're doing on stages and things you're doing with the 10 company, whatever it might be, that more and more carriers find out more about what you're doing so you can come in and work with them too. So, because I think what you're doing is what you guys are doing now that I could finally understand a little bit more. It's just, again, it's a lot to wrap my head around, but it's also incredible to know what you guys are doing because you're hitting a lot of pain points and you're able to help solve a lot of those pain points because it's easy for whether they're C-suite level underwriters, claims adjusters, whatever the role is within a carrier or an MGA. It's hard for them to see from that perspective that you guys have. They're so in the trenches every day. It's hard to get that view that you guys have.
Yep. And we
And
work with
so,
a ton of mutual companies, regional mutuals, where there's just so many things we can bring right away to say, hey, we did this for these guys 2 states over. Take a look. What do you think? And they're like, oh, this is amazing. We got 6 people retiring. This is exactly what we need right now to help build the bridge. Yeah, it's a lot of fun, Heath. I'll tell you that much.
I bet it is. I can only imagine, how much fun that is for you, and especially with so many different things going on. And again, like you said, you're a traveler. You get to go through a lot of different things. You get to see a lot of different avenues and respect from that perspective, I should say. You brought up AI earlier, and I want to get back to that for a minute, just before I have to end the conversation here, because that's a big, hot button of mine. I love AI. I love anything that has to do with AI. And I'm just fascinated by where we're going there. But like when you talk about the workflows, as for example, like where do you guys decide, where AI belongs in the workflow versus traditional just automation, which again, there's still carriers and brokers that haven't even, go ahead.
No, yeah, keep going.
No, I thought you were about to say, but that haven't even grasped, automation itself, traditional automation. And now you're trying to introduce AI, in their workflows. Should they just skip right over traditional automation or pair that with, once they finally implement traditional automation, then pair that with AI? What does that look like? I know it's a big question, but I'm interested to hear your thoughts on that.
I'd say a couple things, Heath. One is I was humbled over the course of over the last year, at how much I learned and didn't know, right? So we invested in 2024. We invested for about 200 of our leaders around the world. We invested in a deep dive, intensive, 13-week immersive AI learning experience. And we culminated that with a all hands meeting in Dubai, which is pretty cool, by the way. And we went through and built a bunch of use cases that we then sort of did a Shark Tank and got a couple of them approved and we deployed. If I think about that meeting in, I think it was December 24 or November till now, the pace with which things have evolved has blown my mind, such that I was kind of casually talking about it, and now it's in every conversation, and it's not a buzzword anymore; it's a practical application.
Yeah,
But
100%.
to your question, having been a broker, for an agent or broker, typically, if I'm gonna put us all in a bucket together, I'm gonna say your problem isn't whether you should go AI automation or your problem is your data. Your problem is your baseline quality of data. Because I don't care how good your machine is, if you're giving it bad stuff to interpret, you're going to get a bad output. Like the reason I can't give you good analytics on a roof from permit data is because permit data doesn't tell me what it looks like, right? So for an agency that's been, they don't have the same characterizations for data. The first exercise this was true 10 years ago, and it's true today, and it'll be true for several more years, is you've got to get to a standard way of looking at your information. And then you got to look at what I want to accomplish. And then is it, what's the processing agent, be it, basic automation, be it up to some AI solution that I need to deploy to get there. I personally think these sort of single threaded product solutions are hard for agents to consider compared with like, how do I evaluate this and move forward incrementally with more technology change, more data change? But it's really hard. And as I see agents rolling up into large acquirers, I think it's going to become those large acquirers, their enterprise value will only be improved if they can figure this out. If they can figure out how to create data clarity and efficiency across their disparate acquired entities, which is really hard.
Very, very hard.
But so my point is, whatever the buzzword about AI is, the agency's main problem is at some point in time, if they were using a fax machine and manila folders, and they haven't gotten that to a place where it's really good in an AMS, it's not going to be really good when you put it in the model. It's still going to be bad data.
And that it goes back to what we were talking about earlier of having all that, the good, clean data to put in there and to make sure it all, so, is that something you guys sit down with these carriers and brokers and walk them through and help them to clean up some of that data before?
We do it with carriers. We do lots of data migration and data hygiene work with carriers.
Is there
MGAs? And as I said, watch that space. We'd love to figure out ways to do it in the agent and broker space. But having walked the walk in that space, I understand how hard it is. And so when we do, it's going to be right, and that's not easy. From technology to carriers to MGAs to product providers to TPAs, we got a really cool ecosystem of friends. And we're always interested in meeting more people and networking. And if I think about, we do an executive conference that we bring a group together. And I left last year thinking this is the most eclectic, cool, diverse group of insurance thinkers that I've ever been around. And so always looking to widen that net, always looking to meet new people. So, look me up, look us up. Love to learn more about what each other does and network. That's kind of
what would be the best place to look you up? Would it be LinkedIn? Would it be email you? What? LinkedIn? Okay. And so they'd find Peter.
Where else is there?
True. They find you. It's Peter Flynn on LinkedIn, right?
Yes, sir.
Okay. And Exceedance is spelled Xceedance.
Yes. That is a word that has some root in cat modeling. I would get it wrong, so I'm not going to try. But it's Xceedance.
Yeah, definitely look that up. I'm definitely going to spend some time on the website now and kind of dig in deeper on maybe even a ChatGPT journey of what you guys are doing and how you're doing it and learn a little bit more there. But, dude, I again, thankful that you came on. I got pages and pages and pages of notes over here that I been putting in my book. And so to go back through, and I'm sure I'll have follow-up questions for you. But again, thank you for coming here. Y'all look him up on LinkedIn, look up Exceedance. And is the website Exceedance.com or is it?
Yes. Exactly.
So that's
Xceedance.com.
Xceedance.com.
Yes, sir.
And yeah, maybe you'll see him on the road somewhere. Maybe you'll see him on stage somewhere. You never know, but definitely look him up. So, man, I appreciate you being here. Thank you so much for the conversation. And I'll look forward to talking to you soon.
Heath, awesome. Thanks, man. It was a great time. Appreciate you.
Yes, sir.